Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. On a beautiful silvery Wednesday, I am down in Mexico and fortunate to be joined by Gary Thompson of Brixton Metals, who I've had fun talking silver with before, and especially while I sit by the pool and make central banker jokes and talk about the price getting tamped down. Gary has spent his life learning all those things that I've been too lazy to study, like geology, how it goes, the tricks to watch out for inside the mining industry. Because Gary, is it true that there's some good, there's some that could be described as other than good? Is that what you found in your experience?
Absolutely. When there's lots of money to be made, there's lots of sharks and we'll say people with low morals that don't seem to care too much about what happens to other people as long as they make their money. So that's the challenging side of the business for sure. But I didn't necessarily go in it for the money. I went in for the fun of the geology and hiking around the mountains and making those big discoveries. That's the fun part for me.
Yeah, well, in terms of people not looking out and just trying to make money for themselves, I believe the American term is called an investment banker, government, or regulatory official. But we will dig into all of that today because, again, I'm trying in the background to pull up the, I found it, the new inflation target, which seems to be running a little hot these days. Hotter than Mexico, I can say that as at least. Although, before we dig into this, and given that it's really an exciting historic time when you think about a true silver rally, whenever it truly gets underway, we'll see. But to be prepared for that, Gary's going to share some of the thoughts he has about how to maximize the leverage to the upside while minimizing the risk at the same time, or at least finding a nice balance of the two. And excuse my manners, but before we get started, Gary, how are you today?
I'm doing fine, thank you.
And perhaps before I dig into all that crazy inflation talk, all those things that Wall Street thinks is silly to waste one's time on, can you give folks a little bit about your background so they know the experience you're coming from and your body of knowledge, and then we'll dig in and maybe even take a couple questions.
Sure. Yeah, I'm a resource geologist, economic geologist. I guess most of my experience is in mining exploration, so tend to lean on the earlier stage discovery opportunities, but also bring about 5 years in oil and gas. And the previous company, now Brixton's about 10 years old, but prior to Brixton, I ran a renewable power company on geothermal power in Western North America. So background diverse in resources, but generally resources, and been in the capital markets now since about 2006 as well. So yeah, looking to build a mining company.
Well, which I appreciate because, you've seen the spectrum, and there's obviously some companies that, on the exploration side, there's a higher potential payout, but also higher risk that someone doesn't find anything, versus a company that's in production. And as I like to point out, there's not any right or not right. There's different things people are looking for. Although perhaps before inflation this, silver that, and I'll pull up the chart. But Gary, would you say in the end, if you pick people who are good people, it's like if you always pick Michael Jordan on your basketball team, and the other guy gets your high school buddy, when you pick people who know what they're doing, know how to play, especially in mining, that you trust, have integrity, know what they're doing, probably even more important than anything else, and actually would you invest profitably even without the silver price rising, if you follow that?
Yeah, I think so. I think you stick to the technical sound advice with good, honest people, and that are doing it for the right reasons and have good good technical background that can get these things across the line, get them advanced up the development curve, and ultimately, it comes down to the economics of the project. If you can deliver a good, solid, high return project, then you'll get funding, and the mine will get built. That's pretty straightforward. I think where the prices are at right now, pretty solid pricing. It seems like everybody wants the price to continue to go higher. but I'm not necessarily convinced that we need to do that. Stability is something to be said for a stable price versus a volatile price, that's for sure.
Part is the lack of stability in today's financial environment, where, as you can see on the price chart, looks like the MRAC and CCP market policy did tamp down the price right at that 28 level, which most likely is a coincidence, and I'm sure Rostin Benham of the CFTC is examining right now. Although, Gary, I remember that was one of the things I had fun talking with you about before, where I can understand, as someone who's running a company, of being for shareholders, employees, and a whole host of other things, wanting have stays too high for government target at 4.5%. They're targeting in May. I know the CPI high, but price of everything is soaring. People at the end of the day aren't on. So how do you think this is going to affect the silver price?
Well, it looks like all commodities are booming, and I think we'll see all metal prices rally. Now you're starting to see oil make a move. So I would expect all commodities to actually run through the roof, is how I see it. So hang on for, I think this inflation is just a teaser on what's to come. Yeah, and Gary, my suspicion is that, unfortunately, you're one of the people I feel comfortable with. I mean, if we were talking to Goldman Sachs, I might be a little concerned. But I think your challenge is that you're going to have to continue running your company in a silver price environment where, at some point in probably our near future, not legal financial advice, but just my own best guess based on looking at reality, you're probably going to have to run your company in a spiking silver environment. And fortunately, I feel like you're up to the task, which is the good news. And for people that think that we are going to see a silver rally, perhaps similar to what we witnessed in 1980 or 2011. Again, ironic to me that this is all decided by a coin flip by Basel, that nobody knows what they're doing or can understand. We do get that how do you approach that? You've seen all these different companies, you've seen some rallies. What would you do if you do think that there's a price rally coming and you want to maximize the leverage without really like adding on a lot of downside or actually taking on actual leverage, but just through the mining stocks? Yeah, I mean, these, the mining commodities in general are notoriously cyclical in nature. So you're going to see these rallies to the upside, and they're probably going to overshoot and have some crazy spike. The challenging part is that the down cycles of these commodities, if you look at the last down cycle, was quite long and deep and painful for explorers that rely on capital markets to raise capital to advance their projects. So that makes it challenging. So basically trying to take advantage of the upswing by transacting and getting enough capital on the ground to advance the projects to a point where they can get built, and kind of on one of those things where it's almost like, if it's a good enough project, it'll get built regardless of the commodity price on a longer term average. So try and make the most of the upsides and prepare for the downside, because there's another one coming. Having lived through two major downturns, and like the 1990s was a long one. That was 10 years, a decade of low precious metal prices. So luckily the last one wasn't quite as long, but it was deeper cut. So squirrel away some money on the top side and be prepared to buy some good opportunities on the next downturn. And so, Gary, are you back there with me, Gary? I can hear you. Can you hear me? No. I sure can. And I guess apologize for the technical difficulties there. We're doing this outside in Mexico, although kind of like I would imagine, not just doing a show or whether it's in metals or anything. A lot of the success in these projects comes from when things don't go according to plan and how you navigate around that, which again, probably, which is why I think if you really want to if there was one single way to maximize your return on a silver rally, would you say, again, it's finding companies where people are able to do that? I mean, for example, we hear First Majestic and they have that Mexican tax credit issue. It's going to be a negotiation. Ken Keith, I'm guessing,
don't know the details enough to say what is fair or right, but you have two parties that are going to have to figure something out. And again, kind of comes back to the people to begin with. Would you agree there?
Absolutely, yeah, yeah. People and jurisdiction. I mean, we're primarily focused in Canada and the U.S. for lots of reasons. Good geology, good place to build mines, but also, Canada and the U.S. has its own issues politically and however, but compared to other countries in the world, it's a pretty good place to operate.
Yeah, and another thing that we were looking in, aside from jurisdiction, that I've been thinking about lately, is that, let's say I do think, and certainly I do think, that we're going to have higher silver prices. I think there's going to be a point where it's going to be substantially higher, whatever that number is. What would you say to the idea of, rather than targeting a company that's in production, maybe are you better off if someone has a defined asset where they have a really good idea of what's there, it's established, but maybe they're waiting to go into production? What would you say is the sweet spot? Because if I, rather than selling it at 25 or 28 bucks, if I think we're going to be $50 or higher than that, hey, maybe I don't know when, but in a year or two, would I be better off looking at companies that are a little bit away from production, or what kind of profile would match people who see that silver forecast?
Well, absolutely. You want to play. I think you want to play the spectrum. I mean, it depends on the individual's time horizons and all that stuff, but you certainly get more upside torque and with the exploration plays when they make a discovery. There's more money to be made there, but it comes with that risk. So maybe it's some production scenarios and playing the spectrum. Right, you definitely want to have some exposure to the exploration plays, because those are the ones that could go up 10 to 100 times or more. So you're not going to get that in the mining companies, but you also have to live with that volatility that they may not. So you kind of want to be probably in the spectrum, is my guess. But where I play is mostly in the exploration side, because that's where the biggest leverage is, and that's where I live on. As a geologist, that's the exciting part, is making those discoveries, and the opportunity is out there, and that's what we're working on.
Yeah, and I appreciate you mentioned the ones that are on the exploration side, which, to be clear, and is not legal financial advice, but just common sense, they are higher risk. If you don't know whether someone finds it or not, but if hopefully we'll have our Yahoo Finance stock chart. I'll pull up what is actually the constituents of the SILJ. Gary, have you ever looked at this index, the SILJ, which is marketed as a silver junior miner index? Have you ever actually seen what's in there?
I haven't. I think we talked about this before. And I've met some of the fund companies that are like, oh, we're investing in junior mining. I'm like, oh, really? Which companies? Hecla Mining, Pan American Silver.
Don't forget Yamana Gold.
Yamana, I know. Come on, like that's not a junior index fund. Come on, let's be real.
Yeah, and to be clear, I mean, I think, in a rising gold and silver environment, the index will do quite well. But again, is it matching what is being advertised? Not trying to be critical, but I don't think so. And because at least when I think of a silver junior miner index, reminds me, I'm aiming at something I read in a Doug Casey book. He said between 1962 and 1968, silver went from $1.09 to about $2.50. He said the average silver penny stock went up 150x. And, so if I'm thinking, all right, these things really fly, especially the small ones, because they can't handle that much money coming into them. Now, again, you're not going to expect to hit 10 out of 10. You're probably not going to expect to hit 5 out of 10. Actually, Gary, what is a reasonable, do you say, well, I'll pick, I don't even know if you can find 30 silver juniors, but do you say, like, I want to look for 20, and then if I hit 3 or 4, but they really hit, and you have the rising environment, you get an outcome like that? What would you say there?
Yeah, there used to be a 10 and a 10 rule, or 2 and 10 rule. So if you pick 20, you might have 4 that make it. You might have 2 that make it really well. 10 or 20 is probably a good number. But just on the cap size, when I look at market cap of companies, I think a junior company is under 1 billion. That's a big company, $1 billion company. And most of the junior miners are under 100 million. And there's a lot lower than that, right? So that's the ballpark for the junior miners. The real juniors are less than probably 30 million. There's a whole plethora of them. So depending on where you want to play, but yeah, you want to get a handful of them for sure. But the challenge with the silver market is there's just not enough good quality silver assets out there. As you see, most of the silver mining companies are continuing to increase their gold exposure because look at every company needs to grow, and the bigger the company, the tougher it is to grow the company and try and find these big silver assets. They don't exist. That's why you're seeing a lot of the big silver companies increasingly move into gold because they need to grow as a company and they can't simply grow on silver alone. So it's an interesting market because of that. There's lots of opportunity out there, but people aren't doing the exploration. That's the challenge the mining business has had. The money is chasing mine development. Everybody wants a mine they can put into production. Nobody wants to go out and do the hard exploration work. Boots on the ground is a bit of a lost art, and that's kind of going to haunt the mining industry of starting to where these big companies are looking for the next mines. Well, they don't exist because the exploration has not been done over the last 10 or 20 years. It's almost a dying breed, if you will, and there's been next to no capital in the ground. So that's the real crux for the business, I think, is there's not enough new opportunities getting ready to come up the food chain. But that's what we do. That's what we're hoping to provide. But there's a bit of a disconnect between the mines you want to build and the assets you want to acquire versus going out and actually building them from nothing.
Yeah, interesting. You mentioned that, Gary, because obviously I do, if I can't figure out what the rules are sometimes, I still try to follow them, which is not easy. But, in my conversations, and I will leave any names out of this, but there's a lot of companies I'll talk about with, different people and here, there's a good chance this gets taken out, or we think this one's going to get taken out, especially once the market starts heating up. A lot of the smaller companies, and again, please be with the best. I don't want to get you in trouble or any compliance in any region or galaxy, but you can answer it in general terms. Is that your expectation that a lot of the smaller projects, some of the bigger companies are going to just need to buy anything? Kind of like you see one of those mortgage bidding wars when the credit's really flowing and you're just like, I'll take it at any price.
No, I don't think so. I mean, I think if history taught us anything, is that the last peak of the last mining cycle, where a lot of the companies were acquiring, and they were acquiring big assets. They weren't early stage projects, but they overpaid. That was the challenge that the industry had, is that we didn't know that was the top of the market, right? If you're up here and you think that's the top, and you think you're overpaying, but then the market goes another double up from that, then you probably got a good deal. But that didn't happen. The market went down from that, so it looks like you overpaid at the top. So I don't think so. I think those top guys they're smart people running those companies, and I think they're going to look for good assets. Basically, the mining companies what do they want? They want a long-lived, stable asset they can produce good returns for a long period of time for shareholders. That's really what they're after, but there's something to be said about small and maybe more manageable and maybe higher grade, maybe higher margins, but smaller, maybe not so long term. So depending on the size of the company, right? A bigger company, they need bigger long life assets, whereas a smaller company can be more nimble and operate a smaller term asset like 10-year mine and make good money for over 10 years for shareholders. So you kind of want to, depending on the asset, and sometimes you don't know until you get into these things what it's all about until you spend a bunch of time and money trying to figure it out.
Yeah, although, Gary, what happens if in the next year we see silver go through $50 and it's magnitudes beyond what we saw what happened a couple months ago when silver went through $30 for a few hours? And what if all these technical analysts and hedge funds start piling in and it jumps to $75? Obviously, it's a hypothetical, but if something like that were to happen, can you even venture a guess on what the environment might look like then?
Well, I can tell you one thing for sure is that the price of silver properties are going to go through the roof. So good luck trying to buy anything that has silver on it. That's for sure. You know, and it probably should be, right. It should be looking at average price should be $50 and speculating to much higher prices, but we have to operate within the environment that we're in. And you know what it does do, though, it puts pressure on keeping your costs, operating costs low. I think as a mining company, you want to run your lowest cost operation as you can, regardless of the price. But you know, if you have a big price, then there's obviously lots of room for wiggle room for error, I guess. Your margin of error is much broader when you have a higher price, I guess.
And
again, I apologize, folks at home, if we're a little choppy on the internet connection today. Appreciate your patience and sticking with us. And hopefully you can hear most of what Gary is saying. I'm catching about 98%, Gary, and everything you said makes sense.
Okay.
In terms of factoring in how to hedge the downside so that people can get exposure if they so choose, obviously you need to decide for yourself, but what are ways that you can hedge the downside that maybe someone who's a little bit new to the sector might not have thought of, that you've learned through your experience?
What's the way to hedge the downside? Well, then, you know, you keep your exposure to a reasonable amount that you could manage. You know, it's the old thing. Don't invest it if you can't afford to lose it. So, you know, you've got to manage that part of your portfolio. Is you know, that's I'm not an advisor, that's for sure.
Yeah, although, I mean, maybe not to oversimplify it, or maybe to try and simplify it as much as possible. To me, it's like if you go back to picking people who know what they're doing, that you trust, that you would invite to your house or you'd want to have dinner with, I think that hedges a lot of it, because I don't try to come on the show and tell people I know more about mining than you or Keith Newmeyer. I rather just go out and find the people that, hey, when I ask questions, they have answers that make sense. They seem like their incentives are aligned with shareholders. They're invested in the project. That's the way to do it. Find management that there's no question about it, that they're invested. Could that be the best way to really hedge your downside risk? Is that knowing that the people making decisions, if it goes bad, it's going to cost them as well?
Well, absolutely. I think that's one of the key factors I look for, is how much is the management team invested in the company. That's a good metric. Just look at that as a simple metric. Because if they're not invested, then why should you invest? Makes sense.
Yeah, although I would agree with that. Although, just from the standpoint of not letting anybody else make our decisions, I'd say that's one metric. But even if the management is invested, I would say to people, don't invest in anything unless you feel comfortable with it.
Well,
if you call investor relations and you have questions, especially if someone, Gary, what would you say if someone called Brixton Metals investor relations, they had a lot of questions, they were new? I would imagine if someone's willing to take the time to explain it, that's probably a way to get them interested in the company. Even if you're explaining things you don't have to, would that be another type of thing you might look for if you're investigating a new project?
Yeah, for sure. I mean, the first thing I do is go to their website, look at what they have, look at their corporate presentation, look at the people involved, trying to understand as much as you can about it. Even though you're not a technical person, try and understand what the plan is. You should be able to get that information from their website and their presentation materials, figure out what they're up to, what they're doing, what they want to do, what they might have. That anybody could be able to do that, right? Everything's online nowadays. There's more video content. We're continuing to trying to build the video content. So we spend a lot of time on our materials because that's our interface to the world. And you can go look at our new website, brixtonmetals.com. And you know, we work hard on trying to simplify the information for non-technical people, but also have enough information that highlights the opportunity.
And Gary, we have the Brixton Metals website pulled up. Can you give folks an outline of the profile, what they're looking at, how much, obviously, and please answer the most important question first. How much is silver? We want the biggest percentage silver. We can have some gold in there too. But what are folks looking at the profile of Brixton Metal? What do they have there?
Yeah, it's changing for sure. The company is growing. We have 4 assets. I would say, we're still technically pretty silver weighted, I would say. Even though, we have a big budget in BC this year. Thorn is getting a big budget. It's copper, gold, silver. Hog Heaven is silver with gold and copper. That's under JV with HPX. Langus is a dominantly silver cobalt play. And then we have a gold project in Atlin up in BC. So several polymetallic assets. It's certainly changing as we advance them, but and any one of those has significant amounts of silver on them. But I'd say Thorn is starting to morph more into a copper gold with silver as a byproduct. Whereas Langus is more of a primary silver with cobalt byproduct and some nickel. So it kind of depends on which one we're talking about. But
yeah, and Gary, can you give us a comment? I see you have the list of major investors here in the chart. Any comment that you'd like to offer there?
Well, just that we're very proud to have some well-established mining people in our deal and companies supporting Brixton. So we're pretty proud of that. And, the company has pretty strong liquidity. I think we just about breaching 100 million shares traded year to date, considering we only have, I think, 198 million out. So traded nearly half our float already this year. So pretty good liquidity for the size of the company. I think we're Canadian, we're around 40 million market cap company. And if you look at the deal that we did with HPX on our Hog Heaven project, that's basically the value of that deal is more than our current market cap. And if they take the joint venture to term, then we would still have 25% ownership, and they would have spent $44.5 million US dollars on the project. So we have an opportunity to potentially build a mine as a partnership with them down the road. That's one of our projects. Yeah, this year we're busy right now. We've got crews and actually actively drilling on our Thorn project in Northwest BC, the copper, gold, silver play. And then once the fall hits, we can work there till about October, and then winter starts to set in early. It's I'm not sure about global warming because the winter is stayed late and coming in early. But then we'll shift gears into the Langus project over the winter and drill fairly aggressively out there. And I wanted to see if I could show you this little silver, a little prize. Have you ever seen native silver in the core?
I don't think that I have, but it looks quite beautiful. Tell me a little more about it, and how do I get one of those?
People ask, what is native silver? What does that mean? Because it is a bit of a rare thing. And most mines, silver comes as a byproduct of gold or copper mines or lead zinc mines, and mostly mixed in with other sulfides. And I'm not sure what the actual number is, but I want to hazard a guess. It's probably in that 10 to 20% of silver mines actually have native silver, which is really pure silver effectively. But to get pure silver, like native silver in the rock like that, is quite unique. And that's what we're working on our Langus project in Ontario. Very high grade silver near surface. They produced 10.5 million ounces there up till about 1989. And so we're working in around the workings at Langus, and haven't even stepped out yet past from the workings. We're still finding lots of silver close to the old workings there. But off the charts, like we're pulling just on the shaft number 3 area from the round of drilling we did. It was like 13 intercepts greater than 1 kilo, and something like 3 or 4 that were greater than 5 kilos. But if you're not that familiar with the cobalt camp, you should have a look in there, because they produced over 500 million ounces of silver there historically, and it has generated some of the highest cobalt numbers in the world. We have assays as high as 18% silver and almost 17% cobalt. which is a bit unheard of for cobalt and also for silver to get. When people start talking silver in percent, that's pretty crazy numbers because normally you're talking grams or ounces. So it's a lot of high grade silver basically. So we're trying to get that into a resource stage, and that's going to take a lot more drilling, but that's the plan.
Well, I mean, I think you could hear even Nibbles was excited about some of those silver grades. His tail is wagging. He's barking it up there. We have a couple of questions. If you had another minute to stay around, I'll blow real quick. Can you lay out the share structure, what people are looking at there?
Yep, 198 million shares basic. I think we're sub 40 million market cap Canadian dollars, and we're sitting on about 7 million in cash, and we're putting most of that money in the ground. We've got crews actively working on our Thorn project, so we'll plan to do a lot of drilling up there, 8 to 10,000 meters this year, and then shift gears into Langus. So we're hoping to get like 50,000 meters over next winter on that project. So stay tuned for lots of news. I think for the company, we're going to be doing a lot of drilling and generating a lot of results. So we're pretty excited about the prospects and the number of exciting targets that we have for gold, copper, and silver.
Well, that sounds good. And Gary, we have a question here from Fantana Ranja. What will be the impact of Klaus's stakeholder capitalism on miners, especially in Canada? I'm not familiar with Klaus. That's a criticism. Be familiar? Any comment on that there, Gary?
I have not seen this.
But I think that anything that holds, I don't want to say holds accountable, but allows investors. Gary, are you back with me? And I believe we are back. We'll hopefully be getting Gary back on there with us a second. Again, appreciate everyone's. And Gary, can you hear me now? Are you with me?
I am. I can hear you, but
okay.
Cannot hear me.
Well, I apologize again for that, but why don't we take one last question and then we'll wrap up because people did send in a handful of questions. Let me see. We had stakeholder capitalism, and there was one other. How did management get their shares, and what's the potential growth of silver mining in Canada? So I guess any comments on management, I'm assuming of Brixton getting their shares and the silver growth?
Sure. Yeah, I can comment on that. Yeah, for some reason, some people seem to think that management get free shares. 0 free shares. I bought every share after tax dollars, either in the market or in the private placement. Even as a founder, I put up hard dollars to get my shares. So 0 free shares, folks. Paid for them all. We do have options. That's part of our incentive. And what was the other question regarding the silver?
Just how you see the growth of silver mining in Canada.
Well, I think, if you look at the silver, there's a lot of silver companies that operate in Canada that they're based in Canada rather than they operate outside of Canada. So I think the Canadian silver business is very strong and will continue to grow. And Canada will, I know the Australians have kind of taken over Canada's lead from the top miners, but I think Canada's second runner in the world and potentially could be back on top here soon. So second runner-up, looking for getting to the #1 spot again.
Well, that'll be nice to follow along, and I'll be watching here in Mexico, and just really nice to talk to people in Canada, be here in Mexico, learn what you can, and pass it along. I think people really appreciate hearing from you, Gary, and thank you for sharing about the company and also your experience in the industry. And perhaps the last thing, most importantly, which I guess is something I've learned, and we get better on a good day. But everyone, I know we had some technical difficulties today, but like anything in life, I appreciate your patience and making it through that. And great to just finally have you on the show so that people could be aware of what you're doing. And one last time, can you mention the website if they have any questions, how they can get more information?
Sure, appreciate that. And yeah, thanks for your time today. Yeah, brixtonmetals.com. brixtonmetals.com.
All right. Well, I'll leave that up here. And Gary, thanks again for joining me. It's been
appreciate
great
it.
getting to know you. We'll look forward to catching up maybe next time on a better internet connection.
Thank you.
Hopefully able to benefit from that. And we'll see you soon.
Okay.